Doesn't it seem as though you've gotten stuck on the stock market path? Well, if last year's financial market boom was down to a Goldilocks global economy, 2018 has so far been all about the bears, the worst start to a year for the world stocks since 2010. A grisly mix of U.S.-China trade tensions, central banks turning off the money taps, and cooling growth hotspots, including Europe, has wiped $1 trillion off of the MSCI's 47 country world index. A pumped up dollar, which had had its best first half in 3 years, and a 16% leap in oil prices have played a big role in clobbering emerging markets. Argentina's peso and Turkey's lira have been shredded by 30% and 17% respectively. Chinese stocks have entered a bear market territory, and emerging market equities have slumped 10%. People just woke up to the fact that something has changed. As well as the escalation in global trade tensions, there has been a realization that the big central banks aren't thinking about stimulating the economy anymore. They are trying to build up capacity in case of a recession. It hasn't been a doom fest everywhere. One Wall Street bellwether, the S&P 500, is clinging on to positive territory, and while the trade jitters have sapped the Dow Jones Industrial, the Nasdaq has set records this month. As a set, the FANG stocks are up almost 40% despite having $400 billion wiped off their combined value in March when it was revealed that Facebook misused 50 million of its users' data. Netflix has more than doubled in price this year, Amazon is up 45%, and Facebook is fully recovered and up over 11%. Also, for all the pressure heaped on China in recent months, its tech giant Alibaba is up 11%. So what does the future look like? Well, let's take a look. Starting out here with the 2-year weekly chart on the spiders, and we can see the close this Friday at 271.28. I was reading in another article earlier today talking about how this recovery from the earlier correction this year in January and February and then into March and April, that this recovery is one of the weakest recoveries on record, and it sure feels like it. So I think we're okay. I think we still have the power moving on up, but we've had a couple 3 weeks on the downside, and we're sitting right near the 20 EMA. We're well above the 50 EMA, so we're still in relatively strong territory. Moving here into the MACD, looks like the fast line is heading south. May go through the slow line here into next week, but I don't think that's anything all that significant. Again, we're above the zero line, and so we're showing some fairly decent strength here. And the fast line has gone through the slow line in previous periods, such as through this area here. So again, I'm not real concerned about that, but it's a possibility. Here into the histogram, it shows that we're descending, and we may go through the zero line and down below, but again, I don't think we're going to go very deep. Here's the price rate of change, and that looks decent, where we have a fairly decent dish sort of recovery, and we're heading up here toward the zero line or the midline. So it's waffling a little bit, but I think we still have strength to pull ourselves out. The RSI is down here at a moderate 49.25, just heading below that 50 line. But again, I think the general sense is that we're having a recovery here. It's just taking a little bit longer than normal. And then into the stochastic, we have a definite fast line moving down to the slow line, but we've also seen that before in this period here, these periods in here, and then this probably looks to be very similar to what's happening now. It may go through the fast line through the slow line here, but again, we're above 50, so we're in moderate strength territory, so I'm not too concerned about it. Into the volume has picked up here in the last couple of weeks or so, so that maybe is a little bit of a red flag. here in the Williams. Williams is heading on down, still above the midline. So again, I'm not all that concerned. I would imagine that we'll perhaps have a recovery and head up perhaps into late next week or something like that. So in order to see that, we need to take a look at the daily chart. So let's move to that chart. And this is the 6-month daily on the spiders. And I've drawn these trend lines here forming this channel. And as you can see, we've got higher highs on the way up here. And then on the bottom line, we have higher lows. We just bounced off of this low trend line here. We may revisit that trend line early next week. We'll have to wait and see on that, but that's a possibility. Moving on down here into the MACD. If you remember, I was telling you that the market doesn't like to repeat itself too many times to make it too easy. The market wants to make these things difficult for traders. So we had this move here, 1, 2, and 3, and I said it doesn't like to do it more than 3 times. So that's exactly what happened. We fast line moved on down here. Now we're still near the 0 line, so it's not real weak. But if you recall back up here, the price, we did fall through the 20 EMA and the 50 EMA. I don't think that's significant, but it is a little bit of weakness. And here that's shown, and we're moving down below the 0 line. I also warned you that there was a sign here in the histogram that we might see a divergence here, or we were watching a divergence in these top lines moving on the way down. That was in a divergent trend, a disconnect between what was happening with the actual price. This thing, though, was heading on down, so I said that might be a flag, and it turns out that it was, and so we had a downside a little bit stronger than we expected, or many expected, but it's not too significant. Moving here into the price rate of change, we're hovering around the 0 line, so I think we're doing just fine. Looks like it's trying to bottom here and perhaps head on up. The relative strength, we are at a moderate level at 36.89, so that's a little weaker than we like to be, but in the times past, it's bounced off of the 20 line here, back at this point here, back in there in late March, and it looks like we'll be successful here. I think the probability is that we will be successful. Looks to me like the stochastic is trying to turn here. Fast line is going to head toward that slow line into next week. Don't know how long it's going to take. This period here took a little bit longer than it did, say, here, or moving back here. But I would imagine this is not going to take too long, and then we're most likely going to head on up into the volume. Volume does not look too bad. It looks okay to me. And into the Williams, we've definitely bounced off of this bottom here, as we did back here and then in early February. This move down here does not look to be as negative as it was here in early February, where it hit twice, or here in late March, where it trended sideways a bit before it bounced off. I think we've got this bounce off. We may have another attempt at heading down below into the oversold territory. That's a possibility. I don't think it's a probability, but it's also always possible. Moving on back up here to the price chart, I think that this trend line is going to hold for a while. We may test this bottom line here into next week at some point in time, but I don't think that conditions are all that bad out there. So I think the greatest probability is that we may test this trend line, but then we're going to head on back up and make our way toward the top of this trend line in the subsequent weeks. So for ChewDog Charts, thank you.